Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 29th of July. Let's have a look at gold. This consolidation on gold has really set in the last day or so. I spoke yesterday about the fact that the market was starting to roll over. 1930 was looking like it was becoming a key basis point for the potential correction, having broken that uptrend. The market rallied off 1097, 1907. So a correction of 73 bucks in the space of just a few hours, really. But then since has recovered much of that move. But you look at this market and you think, well, is this still likely to be a corrective move? Well, you look at the momentum. The RSI failing to get back above 60 is interesting, as the MACD lines have also sort of crossed over. It's on the brink. I'm not saying it's sort of imminent in terms of correction, but it certainly seems to be threatening that way. It did break that uptrend, and you're starting to get a negative candle today. I think the Federal Reserve is going to be really important, because how the Federal Reserve sets its stall out in terms of being dovish, I think is going to have a really significant impact, potentially near term, on the certainly on the dollar and yields. And subsequently, I think that we could see, if the Federal Reserve doesn't meet those expectations, then you could see the dollar rallying, yields rallying, and that's going to drag gold lower. Now, the technicals would certainly suggest 85 on RSI, 87 yesterday, 85 today is really stretched on gold, really stretched. So you'd say that the upside potential on gold looks, well, certainly becoming limited, shall we just say that, before a near-term technical pullback. Now, what the extent of that pullback is, well, that's to be seen. But I mean, obviously we had, what was that, 70 bucks worth of pullback or so, 70 bucks, and you didn't really see much of a reaction at all on the hourly or the daily momentum indicators, certainly, and given the fact that the market rallied into the close, daily momentum remains pretty strong. But the potential for a correction is still growing by the day, I think. 1930 is a bit of a gauge. Initially, 1945 has basically held yesterday afternoon through to today's session. So you start to lose that support, and you think, well, okay, could we be testing 1930 again, which is a bit of a near-term pivot? But the main support obviously is 1907. If that does break, then that would complete a top pattern. Some way off at the moment, but still, it would complete a top pattern, and you'd start to think, well, 1860s, 1840s, so the mid 1800s really does come into play. So this is a move at the moment, which obviously is still holding up, but the threat of a correction is still there, given how stretched the market is, and obviously the Federal Reserve meeting today. Well, we're expecting that we could see a bit of a reaction. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.